Welcome back. Economic data in focus. European markets opened mixed this morning as investors overseas are waiting on some key inflation data to come out. The CPI comes out at 8:30 a.m. Eastern, so we'll get that to you in about 2 hours. Joining us right now to give the Irish perspective is KBI Global Investors CEO Sean Hawkshaw and KBI Global Investors CIO Noel O'Halloran. Good to see you, sir. Thank you so much for joining us, gentlemen.
Good morning, Maria.
Yeah, good to have you here.
To come on your show.
Oh, well, we appreciate you joining us. Characterize the world for us. You're invested across the world. Where do you see growth?
Yeah, so we're pretty confident in terms of the world, where the world is at right now. We see the US as the main locomotive for world growth. But Europe has been picking up very strongly. So over the last 12 months, I think the big surprise has been the strength of the European economy. And then the emerging markets have finally begun to grow again over the last 2 years, and particularly from an earnings point of view. Yeah,
that's something Dagan and I talk about a lot, that for the first time in a long time, you're seeing synchronized global growth.
Right, the first time in a decade. Is there anything going on right now? Because we started the show about the United States blocking the Broadcom purchase of Qualcomm. That, you throw in the steel tariffs. Is that a concern for you enough that you would change how you've allocated your portfolio, where you invest, how you invest?
I think at this point in time, no. I mean, we just see the fundamentals as strong enough to maintain our current positioning. But where these seem to escalate, then absolutely. I mean, ultimately, if we escalated to, more than a tit-for-tat type war, and we had serious inflationary concerns, then I think that would be concerning, not just for equities, but also for bonds.
When everything looks so rosy, you have to worry where are the blind spots. What are you worried about right now in terms of the global outlook, and what country, where do you see risk building?
Yeah, I mean, from our perspective, risk is from a fundamental point of view, probably the first thing to do is, as we evolve from Goldilocks maybe into next year, does inflation suddenly become an issue? I don't think it's an issue for 2018. I think it's probably potentially a 2019 issue. Mm-hmm. And then on the politics side, I think that's where we would see risks.
Speaking of that, what about the UK? Sean, tell us about the Brexit situation and how that's impacting how you approach investing.
I think Brexit is a serious concern. I think it's the time for fudging is over on Brexit at this stage. I think we need to see some decisions being made at the moment. If you look from the perspective of our industry, there's still a huge amount of uncertainty in terms of passporting of UK funds into Europe. You've got a 7 trillion sterling asset management business in the UK. 20% of those assets are managed for European investors, and at the moment we don't know whether those funds are going to be able to be sold into the UK or not. I think from an asset management perspective, it means that a lot of UK fund managers are already looking at the optionality of increasing their operations and footprint in locations such as Dublin, which is good for us because that's where we're located, also Frankfurt and Paris. And I think we're going to see a lot more of that until we get some certainty around Brexit.
How does the U.S. tax cut change the global landscape, especially for a country like Ireland, which has kind of benefited from very low corporate tax rates?
I think that's a good question.
It's a great question.
Ireland is a small, open economy. That's the first thing we all learned when we went to college. We're very dependent on global trade, and any form of protectionism, whether it's through Brexit or through U.S. policies, potentially have a negative impact on the Irish economy. I think you've got to look at it two ways. There's the real economy in terms of jobs and employment, and there's loads of good reasons why multinationals, not just US, have located in Ireland. And then there's a virtual economy where you've got intellectual property and royalties and all that kind of stuff moving around. And there is no doubt that a lot of large multinationals have been able to arbitrage the tax situations and the territorial base for tax versus the domestic base for tax or whatever, and they've got huge advantages out of that. I think that's been closed down from two perspectives. I think the Irish authorities took initiatives a year or two ago to close down, which I never really understood, this double Irish idea, and then you've got the recent Trump initiatives, and I think a lot of that is going to be closed down.
This is why this is the big story of the moment. We're watching protectionism potential and its impact. Gentlemen, great to have you on the program. Thanks very much for your insights this morning. Sean Hawkshaw and Noel O'Halloran.